China's decision to block silver exports in 2025 has sent shockwaves through the global markets. This isn't just a policy shift. It's a strategic maneuver that challenges conventional wisdom about resource control. For decades, China has been a major player in the silver market, acting as both a significant producer and consumer. But this recent move marks a dramatic shift, echoing a history of resource management that prioritizes national interests over global demands. To understand the gravity of this decision, we must first examine China's historical role in the silver trade. Traditionally, China has been among the world's top producers, consistently contributing a significant share of the global supply. This has granted the country substantial leverage, influencing market prices and international trade dynamics. However, China's strategy has never been about merely participating in the market. It's about control and foresight. In the past, China's approach to natural resources has often been characterized by a long-term vision that prioritizes economic security and strategic advantage. This is evident in their policies surrounding rare earth elements and other critical materials. By managing exports and controlling the flow of resources, China has positioned itself as an indispensable player on the global stage. The silver blockade is another chapter in this narrative, raising questions about the underlying motives and the broader implications for the world economy. One potential reason behind this move could be the anticipated increase in domestic demand. Silver is a crucial component in various high-tech industries, including electronics and renewable energy. As China continues to expand its technological and industrial capabilities, securing a stable and sufficient supply of silver becomes a national priority. By restricting exports, China ensures that its burgeoning industries are insulated from global supply fluctuations and price volatility. Moreover, this blockade could be a strategic response to international tensions and trade disputes. In recent years, geopolitical frictions have intensified, with trade wars and economic sanctions reshaping global alliances. By limiting silver exports, China might be leveraging its resource control as a bargaining chip in broader negotiations, asserting its influence in a world where economic power is increasingly wielded through trade and resource management. In essence, China's silver blockade is not merely a domestic policy decision. It's a calculated move in the global chess game of economics and politics. This action forces other nations to reconsider their reliance on Chinese silver and, by extension, their strategies for securing critical resources. As the world grapples with the implications of this decision, the narrative of ambition, risk, and power unfolds, revealing a China that is both a resource guardian and a global strategist. Understanding this context is crucial for anyone looking to grasp the full impact of China's decision. It's not just about silver. It's about the broader economic strategies that drive global markets. As we delve deeper into China's past economic trends and policies, we'll uncover the patterns that have led to this pivotal moment, shedding light on the intricate dynamics of resource management and global economic influence. Throughout history, China's economic maneuvers have often been shrouded in a blend of strategic foresight and seemingly opaque decision-making. In understanding why China might be blocking silver exports in 2025, we are compelled to dig into the annals of their economic strategies, where the past holds valuable clues. China's relationship with natural resources has always been a dance of control and influence. In the early 2000s, China began a significant shift, focusing on securing access to vital resources globally, a move that was driven by its rapid industrialization and economic expansion. This was not merely about amassing wealth, but about leveraging these resources to fortify its global standing. China's approach often involved entering into long-term contracts and partnerships with resource-rich countries, particularly in Africa and Latin America. This strategy was not limited to acquiring raw materials. It was about embedding itself into the economic fabric of these regions, creating dependencies that could be beneficially exploited. In the case of rare earth elements, for instance, China became a dominant player by ramping up production and securing a near monopoly, a move that allowed it to wield significant power on the global stage. The implications were clear: control the supply, control the market. Turning our attention to silver, historically, China has been a substantial player in the silver market, both as a producer and consumer. The country's demand for silver surged as it industrialized, driven by its electronics and photovoltaic industries, which rely heavily on this precious metal. However, China's policy shifts in the past have often echoed broader economic strategies. One notable instance was the rare earth export restrictions implemented in the late 2000s and early 2010s, ostensibly for environmental reasons, but widely seen as a strategic move to boost domestic industries and exert geopolitical pressure. China's natural resource policies have not only been about economic gain, but also about technological advancement. By controlling the export of certain materials, China has aimed to ensure that its own industries have unfettered access to critical supplies, thus fostering domestic innovation and reducing reliance on foreign technology. This tactic has been particularly evident in the tech and renewable energy sectors, where China has sought to dominate by controlling both raw materials and the resulting technologies. Reflecting on these past strategies, the current decision to block silver exports could be seen as part of a larger narrative where China seeks to maintain a strategic advantage. Silver is integral to several high-tech applications, including semiconductors and renewable energy technologies, areas where China is aggressively pursuing leadership. By limiting exports, China could be aiming to secure its own technological future, ensuring that its industries are not hampered by international competition. Moreover, China's economic policies have often been intertwined with its geopolitical objectives. Just as the rare earth restrictions were perceived as a tool to exert pressure in international negotiations, blocking silver exports might serve a similar purpose in 2025. In a world increasingly fraught with trade tensions and technological rivalries, controlling a critical resource like silver could provide China with a potent bargaining chip. This decision could also be informed by domestic economic pressures, as China grapples with transitioning its economy from one reliant on manufacturing to one driven by consumption and innovation. Historically, China has shown a propensity to use economic levers to achieve broader strategic goals. The decision to block silver exports may well be informed by lessons from the past, where control over natural resources has translated into both economic and geopolitical clout. As we delve deeper into this unfolding story, it's crucial to consider how these historical strategies and economic shifts might illuminate the path China is charting for the future. China's decision to block silver exports in 2025 is stirring up a whirlwind of speculation. Why now? It's a question that invites a myriad of theories, each more intriguing than the last. Let's peel back the layers and inspect the possible motivations behind this strategic maneuver. First, let's consider the geopolitical chessboard. China has long been a master at leveraging its economic power to assert its global influence. In recent years, tensions have intensified with Western nations, particularly the United States, over trade policies, technology, and territorial claims. By restricting silver exports, China may be aiming to exert pressure where it knows it can hurt, industries relying on silver for electronics, solar panels, and more. It's a move that underscores China's willingness to wield its resource control as a geopolitical tool, akin to a well-played gambit in a high-stakes game of chess. But geopolitical tension isn't the only factor at play. Internally, China's economy faces its own set of pressures. With a burgeoning middle class and a government committed to technological self-reliance, the demand for silver within China is skyrocketing. Silver is critical in the production of electronics and renewable energy technologies, sectors that are pillars of China's economic future. By retaining more silver domestically, China could be ensuring that its own industries have the resources they need to thrive, thereby securing its position as a global leader in tech innovation. Moreover, there's the aspect of technological advancement. As the world races toward a greener future, silver's role in renewable energy becomes increasingly vital. Silver is a key component in photovoltaic cells used in solar panels, and China is not only the largest producer, but also the largest consumer of solar energy. By curbing exports, China might be positioning itself to dominate the renewable energy sector, ensuring that it has the necessary resources to continue its rapid expansion and potentially dictate global solar market trends. Let's not overlook the economic strategy behind this decision. Historically, China's economic policies have been marked by a blend of aggressive expansion and strategic resource management. Restricting silver exports could be seen as a move to manipulate global silver prices, potentially driving them up and benefiting from increased market value. This kind of market influence allows China to wield power not just through ownership, but through the strategic scarcity of resources. The timing of this decision also coincides with global economic uncertainties exacerbated by pandemic aftershocks and shifting trade alliances. By making a decisive move now, China could be hedging against future economic disruptions, ensuring it has a buffer in place as the world navigates this turbulent landscape. It's a proactive measure that speaks to China's foresight and its readiness to safeguard its national interests amid global volatility. In essence, China's restriction on silver exports is a multifaceted strategy that intertwines geopolitical maneuvering, economic fortification, and technological ambition. It's a reminder of the intricate dance of power and resource management on the global stage. As this story unfolds, the world watches closely, aware that such a move can ripple through markets and industries far beyond China's borders. Investors and nations alike must adapt, recalibrate, and perhaps even rethink their dependency on silver as the implications of China's decision continue to unfold. Global markets are teetering on the edge as China's decision to block silver exports sends shockwaves through industries worldwide. Silver, often overshadowed by its more glamorous sibling gold, plays a pivotal role in countless sectors. From electronics to solar panels, its conductivity and reflective properties make it irreplaceable. Now, with China, the world's largest producer, pulling back, industries are scrambling to secure their supply chains. Investors are reacting with a mix of panic and opportunism. Silver prices have already begun to spike, reflecting the uncertainty, and market forecasts suggest volatility is here to stay. Hedge funds and individual investors alike are revisiting their portfolios, considering silver as both a hedge against instability and a potential gold mine in itself. The ramifications extend beyond the immediate supply and demand metrics. Countries heavily reliant on silver for manufacturing, like Japan and Germany, are already feeling the strain. With silver becoming a potential bottleneck, these nations are being forced to innovate or face economic slowdowns. Companies are exploring alternatives, but the reality remains. Silver's unique properties make substitutes difficult to find without compromising quality or efficiency. This has triggered a strategic shift in procurement strategies, with businesses looking to diversify their sources and increase inventories to withstand future disruptions. Meanwhile, other countries are seizing the opportunity to fill the void left by China. Nations with silver reserves are ramping up production, eager to capture a larger share of the market. Mexico, Peru, and Australia, already significant players in silver mining, are positioned to benefit from this geopolitical shift. This step up in production, however, comes with its own set of challenges. Environmental concerns and the finite nature of silver deposits pose questions about sustainability and long-term viability. Yet, in the world of commodities, where profit margins often overshadow environmental considerations, these concerns may take a back seat. The strategic maneuvers are not limited to producers. Governments globally are reassessing their trade policies, considering tariffs and partnerships that could mitigate the impact of China's move. For some, this is a moment to push for greater self-reliance in critical materials. The European Union, for example, is accelerating its initiatives to develop internal capabilities for raw materials, aiming to reduce dependency on external sources. This shift towards self-sufficiency, while costly and time-consuming, could pave the way for a new era of industrial autonomy. In the financial markets, the response has been swift. Analysts are revising their models to account for potential shortages and price hikes. The volatility index, a measure of market fear, has ticked upwards as traders brace for the unknown. Speculative trading in silver futures has surged, with many betting on further price increases. Yet, amidst the chaos, there are voices of caution. Some experts warn that the market's reaction might be overblown, suggesting that technological innovations could eventually reduce reliance on silver, much like what happened with other previously indispensable resources. This tumultuous landscape is a testament to the interconnectedness of global economies. What begins as a policy decision in one country can ripple through stock exchanges and industrial sectors worldwide. For investors and industry leaders, this is a stark reminder of the delicate balance in global supply chains. As they navigate these turbulent waters, the question looms: how to stay ahead in a world where the rules can change overnight? The answer may lie not just in strategic foresight, but in the agility to adapt and innovate. China's decision to block silver exports in 2025 is no mere regulatory whim. It is a calculated maneuver, a strategic masterstroke designed to bolster its economic might and influence on the global stage. First, consider the immediate economic benefits. By restricting silver exports, China effectively tightens global supply chains, driving up the price of silver worldwide. This is not just about inflating prices, it's about control. With a significant portion of the world's silver production under its belt, China can leverage this precious metal as a tool of economic diplomacy. Countries dependent on silver for industries ranging from electronics to solar panels will find themselves at the negotiating table, perhaps more willing to align with China's geopolitical aims in exchange for access to this critical resource. Experts suggest that this move is part of a broader strategy to secure China's position as a leading force in the green energy revolution. Silver is a key component in solar panel manufacturing. By controlling its supply, China can not only dominate the solar industry, but also set the terms for the global transition to renewable energy. This aligns perfectly with China's ambitious climate goals and its desire to be seen as a leader in sustainable development. Moreover, by ensuring that its own industries have preferential access to silver, China can accelerate its technological advancements, securing a competitive edge in emerging sectors. Furthermore, this export restriction allows China to hedge against potential economic volatility. In times of crisis, having a substantial reserve of silver can act as a financial buffer. It provides the country with liquidity and stability, allowing it to weather economic storms that might destabilize other nations. By hoarding silver, China isn't just amassing wealth, it's building a fortress against uncertainty. Globally, this decision could shift the balance of power in commodity markets. Nations previously complacent in their resource dependencies may be forced to rethink their strategies. Some experts speculate that this will lead to a new era of resource nationalism, where countries prioritize securing their own supplies of critical materials. For China, this is a win-win scenario. By pushing other nations to adopt similar protectionist policies, it levels the playing field, making China's own tactics seem less aggressive by comparison. The move is also a signal to the world about China's long-term vision. It underscores a commitment to strategic foresight and resource management, qualities that have historically been the bedrock of economic empires. In the eyes of Beijing, this isn't just about silver. It's about setting a precedent for how future resource scarcities will be managed. It's a demonstration of power, a reminder that in the complex web of global trade, those who control the resources control the narrative. The decision to restrict silver exports is not without its risks. It may provoke backlash from trading partners and potentially spark retaliatory measures. However, the calculated risk is part of the strategy. By taking a bold stance, China asserts its willingness to endure short-term discomfort for long-term gain. This is a classic power play, one that reflects a deep understanding of economic chess, where each move is designed to secure a more dominant position. In the long run, China's silver strategy might serve as a case study in strategic resource management. It highlights the importance of foresight in navigating the complexities of global finance. For other nations and businesses, the lesson is clear. Anticipate future scarcities, secure critical resources, and be prepared to leverage them as both an economic asset and a geopolitical tool. As the world watches China's next moves, it becomes evident that in the high-stakes game of global economics, foresight and strategy are the ultimate currencies. In an increasingly interconnected world, China's decision to block silver exports in 2025 serves as a masterclass in strategic foresight and resource management. This move isn't just about controlling a precious metal. It's about wielding influence on the global stage. For other nations and businesses, the lesson here is clear. Control over key resources can translate into significant geopolitical power. In the realm of global finance, foresight in managing resources can determine not just economic health, but also international standing. China's maneuver underscores the importance of anticipating future demands and potential shortages. By securing silver domestically, they safeguard their technological advancements in sectors like solar energy and electronics. This not only boosts their economy, but positions them as a leader in sustainable technologies. The message to the rest of the world is unmistakable. Those who think ahead, plan strategically, and manage resources wisely will shape the future. The implications extend beyond silver. Countries must now evaluate their own resource dependencies and consider the potential vulnerabilities these pose. Businesses, too, should take heed. As the global economy becomes more volatile, relying on a single source for critical materials becomes increasingly risky. Diversification of supply chains and investing in alternative resources are no longer just strategic options. They are imperatives for survival and growth. Moreover, China's move highlights the necessity of technological innovation in resource management. By investing in alternatives and developing new technologies, nations and companies can reduce their reliance on finite resources. This approach not only lessens vulnerability to geopolitical shifts, but also opens new avenues for economic expansion. There's also a psychological component at play. China's decision is a calculated signal to the world. They are not just players in the global market, but key architects of its future. This perception of control can drive investment and partnerships, further consolidating their influence. For other nations, this is a reminder of the importance of perception management in global strategy. How a country is viewed on the world stage can impact its economic alliances and opportunities. In essence, the world can learn that strategic resource management is about more than just economics. It's about leverage. It's about positioning oneself not just to survive, but to thrive in a rapidly changing landscape. The nations and businesses that recognize this will not just react to changes, but will be the ones orchestrating them. In conclusion, China's silver blockade is a powerful reminder of the critical role that foresight and strategic planning play in global finance. As the world watches, the lesson is clear. Those who control the resources control the narrative. It's a lesson in ambition, risk, and power that the rest of the world would do well to heed.